With silver and gold hitting record highs, how should traders be looking to play the markets right now? We spoke to one technical analyst, Bill Downey, back at the iGlobal forum in New York last week. Here's how he sees it. What trading range are you currently looking at for gold and silver?
Well, for silver, the $30 area is certainly an area of resistance that needs to be overcome. It's been trading there for about 4 months,
right.
And it's moved between $25 and $30. There's been a lot of support on the way down. This latest rally, quite frankly, spent about 8 weeks going from 30 down to the 26 area, and in just a few short weeks we've come right back up to the $30 area. Right. We think that there is some resistance there, and possibly some hedging that's going on in the mining industry. There's some rumor on that. But the inventory at the COMEX seems to be dwindling. There's a lot of discussion about physical demand. Coins have been through the roof. The mints have been reporting a lot of sales. And so we think that the inventory levels, the supply itself, is causing price appreciation, which needs to be looked at. The forward spot price of silver is actually trading higher than the future price. And that is usually indicative of a tight supply.
You touched upon something interesting, because the supply discussion with silver, I've been hearing, both sides of the story.
Right. Well, there are reports that there is a refinery backlog. In other words, the refineries are the ones that are at capacity right now. And so it really doesn't matter how much silver you've got behind there. There's a bottleneck where the refinery is. It's got X amount of output, and the demand has been outstripping that. And so what ends up happening is that when you've got companies who use industrial silver, and you've got speculators who are concerned about currency, when you've got all of those areas coming in all at once, what ends up happening is when you get to that bottleneck, there's only so much coming out. And what that does is it causes, again, if you're a producer of silver, it's great, but if you're a user of it and you see the pricing, you want to be able to lock in your prices now, and so it's causing a lot of demand to go in there. Okay. So it's not to say that 3 or 4 years from now there won't be supply, but I think that's one of the avenues, is that the refineries themselves are having, they're maxed out right now.
So you mentioned that we are seeing resistance now at the silver price, but if someone wanted to get in now, is it kind of too late in the game?
It's not too late in the game, but I think what investors would be best at doing is not going in all at once with a large amount. There's some good support around the $24 area, but if I was looking to establish a position, I'd work my way down, and I would not try to go in all at once, because there are going to be corrections along the way. So we think the $24 area is an area that could find very good support, even as low as 21 maybe, but I would be cautious and not try to jump the gun too much. If we start breaking above $32, $33, it's possible we could get around to 37 and maybe even the 40. But again, I think that you want to be cautious and slow and try to accumulate a little bit. And think about buying physical. Once you buy physical, you tend to hold on to it more than try to trade it in and out. Right. And if some of the forecasts that happen are to come true, where silver's going a lot higher, if you're holding physical, you'll be less apt to sell it.
You can send us your comments and questions at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone. Thanks for watching.